Well, the markets have come off the day's high. As we mentioned, the gap up was likely to get sold in two on first tick because we're just, aligning ourselves to what happened yesterday. And that's precisely what's happened. We're closer to around that 18,300 odd mark. But let's get chatting with the next management. We have Cummins, the management of Cummins, who's joining in. And the numbers were an all-round beat. They look good on the top line. The sense that raw material costs as well are cooling off. And the company managed to maintain the margins as well. To understand more about it, we're joined by Mr. Ajay Patil, the Chief Financial Officer at Cummins India, who joins in. Hi, Mr. Patil. Good morning. Well, your Q2 FY23 numbers, they look very, very strong. The quarter number, the revenue number itself looks strong. How much of it was due to pre-buying ahead of the CBCB4 emission norms getting implemented mid next year? And how much of that is due to lumpy orders, say from the data centers business? Go ahead.
Hi, good morning to you and good morning to all the viewers. I think we finished the Q2 pretty strongly, and you did talk about few points. All I would like to clarify is that in our results, while there is an element of the projects business, as we call it, which did cause a revenue, but that was not the only reason we got a bump. Number two, you raised a point about CPCB4 plus. As many of us know, I think the guidelines are now published, and July 1st, 2023 is the date for implementation. So from a pre-buy point of view, we are not seeing as much a pre-buy in the Q2. But as we go forward, I would say that there will be an element of pre-buy that will kick in. But Q2, we didn't see any significant pre-buy as a consequence of the emission norms changing.
To break this, Ajay, hi, good morning. Could you break this growth in Q2 with in terms of volumes and price increases as well? I mean, did you take significant price increases?
Yeah, it's a combination of two things here. One, we have been taking tactical price increases over the previous quarters. Certainly, those are now catching up with respect to helping us on the pricing side. And number two, the volume is really holding up quite well, both on the domestic as well as on the export side. If you look at the half-year performance, I think our overall revenue is up 25%. Again, through a combination of what we see reasonably stable demand, both on the domestic and export side. But pricing is certainly playing its part.
Okay. So for exports particularly, you've said that in the last 2 to 3 quarters, export is picking up. What would your guidance be for the full year, and have you changed it compared to when we spoke last?
No, we haven't really, because the geopolitical, situation as well as the supply chain challenges continue, although the intensity of supply chain has reduced to some extent. So therefore, we haven't provided any guidance. But what I can say, though, is that what we have observed in the previous quarters, as well as the quarter before, is that the exports end markets across the world where we supply are holding up reasonably well. As an example, most end markets, be it Asia-Pac, Europe, Middle East, Africa, Latin America, we see fairly stable demand in the quarter. And whatever indications that we get, looks like the demand is holding up. There may be a situation where one region may have a softening of demand and the other region might be a bit stronger. So overall, our assessment is that exports would sustain at least for coming quarters.
So around 500 crores per quarter, doable?
Sorry, I didn't get you.
Around 500 crores per quarter? I think that's been the run rate, right? Can you do as well as what you did in the first half of the year on the quarterly basis?
That's the endeavor. Okay. That's what we are really focused on.
Okay, and it's heartening to hear, Mr. Patil, that you're saying that the export market is holding up. In fact, for a company like yours, you could be a beneficiary as well of the European crisis, because I think the demand for gensets are going up. But we'll take that point that the export markets where you are functioning in are holding up. The other factor I want to focus on is the gross margins. They hit a multi-year low, in the previous quarter, but that's gradually improved. Do you believe that the gross margins will continue to improve up? If I remember correctly, at one point of time, you're doing 36% odd of gross margins. Now, that's improved by a couple of 100 basis points in the past quarter in comparison to Q1. Improvement on the cards from here?
Yeah, I think that's the efforts we are taking. And again, maybe in our previous conversations, I might have mentioned this. We look at our margin improvement in a very rhythmic manner. there is a fairly established process in terms of how we manage our cost. Certainly, the commodities, the way the commodity cost rose in the last few quarters. Now, what we have been observing in the 2 quarters that the commodity costs are softening up. So I think that is helping us. Plus, our internal efforts are also contributing. And third, and importantly, as you would imagine, the volume leverage is certainly helping us to keep, giving a sequentially better margin performance.
You were talking about overall exports, right? And the run rate that you're seeing. Particularly, can you tell us how has the performance been in some of the weak markets like Africa? Any challenges that you're facing there, I ask, because every other industry that we speak to is talking about severe challenges in Africa. There's the forex issues, there's the receivables issues. Are you facing anything of that sort? And what's your contribution from there?
I think certainly, Africa as a region, especially in few countries, there are, exchange controls. So as a consequence, getting some of the receivables collected is a challenge. However, we anticipated this few months ago, and accordingly, we have changed certain processes on the commercial side. So as a result, our go-forward sales have all been reasonably well protected from a, so to say, credit risk point of view. But to your point, generally speaking, yes, there are challenges in different countries based on what their respective central banks are doing on the exchange control side. On the demand side, though, we see that sequentially, the demand is kind of holding up, depending on which segment you look at, whether you're looking at the high horsepower or the low horsepower side of our products. But overall, if you're asking me, generally speaking, I think the demand is fairly stable for us.
Mr. Patil, I recall you had earlier mentioned that some part of your revenues or some part of your execution is getting hampered because of supply side issues. I think it was around 10 to around 20%. Has that improved drastically? Would you want to put a number to that? How much of your revenues are currently getting affected because of the supply side issues?
I think we continue to have, some specific challenges with respect to certain components. As a consequence, we are not able to fully meet the demand. Now, it varies from quarter to quarter, but generally speaking, I think anything between 10 to 15% of our demand we are not able to meet as a consequence of certain disruptions in the material supplies. And this is very specific to few electronic components. It's not generally applicable to the entire supply chain. It's very specific to few.
All right. And just a quick question. In the last week or so, Cummins and Tata Motors, they teamed up for that hydrogen-powered engines, right? Will that be, with the listed entity, or is it in the capacity of the JV? Nothing to do with the listed entity.
I think we already have a joint venture with Tata Motors from a commercial vehicles point of view. I think the MOU that was signed by Cummins US
right.
with Tata Motors for the offering hydrogen as an alternate fuel for the mobility segment.
Okay.
So.
Okay. All right, Mr. Patil, thanks a lot for joining in and all the best. That's the word coming in from Cummins. But for the market, actually, it is still very, very quiet. The headline index is absolutely